All right, so I'm excited. We have an awesome panel here. I'm Gil Rosen, help run the Blockchain Accelerator, run BAS over here, teach a course on blockchain with Kuhn and Steven. Hope you guys have enjoyed your day. Also help run Blockchain Builders Fund. And here with us we have Nikil Viswanathan from Alchemy. I don't think he needs an introduction.
Thanks for having me.
Definitely. Joey Krug from Founders Fund. And David Hoffman from Bankless. This is an awesome and diverse crew of investor, media, builder who has an insight into builders. With that, let's get into this. All right. Question number one. Do you think that we're moving to a place where here we are. Yeah, do you think in blockchain we're shifting to a place where there is more of a focus on fundamental value and adoption and utility, or is this next cycle, as the price of Bitcoin seems to imply we're in, going to be driven again by memetics and hype and Ponzinomics to some degree?
Who wants to go first?
Go for it.
All right. As much as I would like to say that this next cycle is going to be a fundamentals-driven cycle, it doesn't matter how true and strong and powerful your fundamentals are, retail and speculation will always come and overpower that. We can always get further out over our ski tips. And so there are plenty of reasons to be very bullish on crypto, and I think if you're an investor in the space, we all have to be fluent in what that means. And then we attract a next concentric circle out of new crypto incomers who don't understand crypto, who aren't fluent in blockchain, who are just here to speculate on the newest hype of that phase, and they will completely drown out all fundamentals for the next 2 to 4 years. And then fundamentals takes over again. And so there's always this pendulum between fundamentals and hype, and when we are in a bull market, we are not in the world of investing in fundamentals anymore. And that is the phase of time that we are entering into, is my opinion.
Yeah, I think that's absolutely correct. As a simple benchmark for this, I bought some Dogecoin 2 weeks ago and it's up 77%. And so like if you look at stuff that has fundamentals, it's not up that much.
Fundamentals are bearish in bull markets.
Yeah, I think in the bear market you kind of start to see people separate the wheat from the chaff, but that's not going to happen in the current environment. But if you're building a company, obviously that's what matters long run, and so you can't lose sight of that as an investor. If you're investing in early stage projects, that still matters a lot. It's the number one thing. But in the short run in the public markets, it's going to be very frothy, I think, over the next year.
My thoughts are, I think it actually doesn't matter. And the reason is, when you look at, I think the answer, or the question that I'm hearing behind the question is, how are we progressing towards long-term adoption of Web3 as a technology for the world? And I think I would view them as two separate events, rather than trying to see if a cycle is driven by hype or in speculation, or it's driven by the technology. I think the important metric you're trying to see is, if you're trying to make money, you're trying to see, is it hyped? And if you're trying to figure out if the technology is going to be here for the long term and how far we are along that projection, the important thing is actually just looking at the technology adoption and the actual real world adoption. And I think trying to say it's driven by hype or it's not driven by hype is actually the wrong question, and really just focusing on where we along that technology adoption curve is what's important.
Awesome. And I mean, to your guys' point, if we look at Web 2, there obviously is a lot of hype and bubbles, whether it's in the real estate industry, whether it's in, GameStop and the like. So it's not like that doesn't exist. I think to some degree, and we'll get into this a little bit more, the question is for a lot of builders here, what should they be looking at and thinking to build in is kind of one side of it. And the other is, have we ever been in a place until now where there really was a lot of fundamental value outside of payments? And I'll dive into that in a second. Curious to hear what your thoughts are. I guess as we look going along this vein, where do you think this next adoption is going to be? Kind of, where are people going to be building? Should they be building? Is this more in the dependent RWA space, which we're kind of seeing a 17, 18-like resurgence in some ways, except now it's possible that this is viable and real? Is it more the restaking kind of ecosystem, which feels a little bit like DeFi summer in some ways, or DeFi in general? Is it going to be gaming and social, AI, Bitcoin narrative? Curious what you guys are seeing or excited on, or what you're seeing people build on.
If you guys let the media go first, the media guy go first, I'm going to take it every single time.
All right, I'll go first. I think one really important thing to realize is one thing that we see in our data is that there will always be whatever is trending on crypto Twitter, or the DeFi summer, or NFT hype, or whatever it is. But the really interesting thing that we noticed is it's not like in DeFi summer, like DeFi is going up and everything else is crashing. That's what's capturing the zeitgeist. But we're generally any kind of excitement around crypto rises the tide across all industries. And one of the things that we've seen, a couple examples to say, it's not just restaking or DPIN or whatever's the flavor of the month, or, data availability, right, is a couple examples. So like one, we are working with, make sure this is like not NDA'd. We are working with Shell, and they're doing a supply chain to track all of their real world assets, like kind of physical equipment moving around the world, which is like a really cool use case of blockchain, right? Another one, I talked to the CEO of, to be a little careful on this one, CEO of one of the top 2 social media apps in the world that all of you have on your phone, half of you are probably using right now. And he was saying, hey, we're super excited about Web3. They had paused their Web3 stuff for part of last year, but they said, we're super excited about Web3 for doing things, several things. One, redoing NFTs on our platform. Another one, they want to do loyalty passes for creators across different websites. Another one's, they want to like tokenize creators and let you invest in an influencer, right? Which is a really cool concept. So the point here is like, one of the cool things about Alchemy is like we get to see broad usage and building across the space, regardless of kind of what's the zeitgeist at the moment. Obviously, the DeFi summer, the DeFi stuff did have more attention, but it doesn't mean that there's none across the board.
Gives me hope.
Yeah. I think sort of all those things are interesting. The one area that I think is not too interesting in crypto, at least to date, in my view, is like the decentralized social media stuff. I just don't think it's 0 to 1 enough. But outside of that sector, there's a lot of interesting stuff happening. I'm a huge fan of what's happening in the DeFi space. I've always been really excited about that kind of subsector of crypto. It's kind of basically the largest market in the world.
It was your first love.
Yep, it's also just like really good. Like if you're borrowing on like Compound or Maker or Aave, it's a way better experience than borrowing from a centralized lender. And today a lot of this stuff is speculation. It's trading other cryptocurrencies, but very long run. I mean, you have the CEO of BlackRock talking about this. Long run, I think most financial transactions will take place on blockchains. It's not going to happen next year. It's probably not even going to happen next decade. But that's sort of where the arc of history is bending here, in my view. Over the shorter run, I am actually still excited for prediction markets. I think Polymarket's actually got a lot of traction recently. Maybe this is actually now kind of the right time for that. The tech stack and UI UX and stuff has gotten to a point where it's actually feasible. So I think there's a lot of interesting stuff happening this year.
Actually, on that note of prediction markets, I remember a tweet from you, Joey, like forever ago, like 2018, 2019, where you were talking about, it was a combo of lack of stable coins and there was the volatility in ETH, and the latency of transactions was one of the big reasons why prediction markets were being held back. And I remember I like stored that in my brain, and it's been like lingering there ever since. And now all of a sudden we have like cheap fees and stable coins, and now all of a sudden like prediction markets can actually have like the foundation to be built on. This guy's tweets, I keep them in my brain. I want to like split your question into two. One is like you were talking about like what is the growth sectors of this industry. Another way to frame that is like, what will this cycle be remembered by? I think unequivocally this cycle will be remembered by AI crypto overlap. And that is going to be like the 60 IQ, very simple, let's smash these two particles together and see what happens. It doesn't have to make sense, but these things are gonna pump. I heard a take at the AI conference, the AI day on Monday that I really, really liked, which is the true innovations in AI crypto will come from very narrow integrations of one by the other, as in like AI products will focus on AI, and then they'll use crypto very narrowly to fit the last piece of the puzzle to make something work, and then vice versa, right? So crypto projects will use AI very narrowly to like make something work. And then the meme ones, the ones that are gonna probably pump the most and then also crash the most, are gonna be the ones that try and do the 50-50 split to really catch on the narrative. But we have insane growth in AI. AI is going to move very quickly. Tokens as a liquidity event are going to actually satisfy that demand for speculation coming from retail as this hype cycle, both in crypto and outside of crypto, manifest. And so these two industries are very fast-paced, and AI won't be able to express its financial interests in the TradFi space because you have to go through all the hoops and hurdles to get liquidity and an IPO. So these two things are very like naturally fit for each other, even though we don't know what the hell is actually real here. But nonetheless, that's not going to stop anyone from speculation. And so that will be what I think this cycle is remembered by. And then there's like a handful of very strong categories to actually talk about real fundamentals. You've mentioned some of them, like the Bitcoin renaissance and actually seeing Bitcoin expressivity happen, eigenlayer restaking and how that's like unlocking the new software as a service model. But I think when we look back on 2024 and 2025, it's going to be the AI hype coin mania. That's how we're going to think of it.
I think I agree with you, especially on the hype coin mania. I look at AI and the popularity of AI like in the Web 2 space, and I think it's still taking some time for AI to permeate like every industry. And we see people using like RAG approaches in GPT to kind of plug it into their workflows. But I think it's going to take some time for that to proliferate. I actually agree. I think AI is going to break the world, and blockchain will hopefully fix it. Is my quick take. Yeah. I think we have some time for that, but in the meantime, you're right. We're going to have a lot of hype projects that are combining the two. Interestingly enough, by the way, Joey, I think the app that I use the most is like Warp and Farcaster. Interesting. Mainly because I think like TikTok and Instagram are ruining my life, and I hate being manipulated. So this idea of not having AI models manipulate me. All right, well, let's go to the next one. David, you touched on something interesting. Curious, what do you guys really think about Bitcoin and everything that is happening in the Bitcoin ecosystem currently?
I can go on this one. So Joe and I were actually just in Dubai at, I think this is the first like actual Bitcoin conference we went to, Satoshi Roundtable. I will say it was like absolutely fascinating for a lot of reasons, and I'll skip the full details of it. But first off, I actually think there's, and for those of you who are in the ETH world who may not be familiar, there's actually been a few kind of key technology innovations in Bitcoin, which have effectively enabled Bitcoin to be programmable. The big one being like BitVM, and what you saw with ordinals kind of take advantage of that and launching, getting a lot of attention. And they had a significant percentage of all ETH DeFi volume on ordinals. So it wasn't like this kind of tiny thing. And what we saw is there's about 20 Bitcoin L2 that are going to be launching in the next 6 to 12 months. I'm actually really excited. There I was like the ETH maxi. I think we have at Alchemy have like a very agnostic view of chains, and we're not like Bitcoin maxis or ETH maxis or whatever. By the nature of our business, we're very heavily like almost all in ETH. But so I was there at the conference being like, I don't know if you guys even have a shot at anything. ETH is like so dominant. But while we're here, I will say that the one thing they do have is like massive liquidity. And if they are able to figure out some kind of technology like that is good enough to make that experience great, and all these funds, all these like normies who have Bitcoin now can do something with it, I think that's actually really exciting. And I really don't think this is kind of ETH versus Bitcoin thing. I think it's how do we bring Web3 and these technologies to the entire world. So I think it's super exciting to see over the next 6 to 12 months.
Yeah, I think it's interesting to see kind of development finally pick up around Bitcoin. I think if you look at kind of the zeitgeist of Bitcoin development, I think it was 2015, maybe 2016, something like that. Blockstream was created, and it was this VC-funded thing to make Bitcoin, really accelerate and have all these kind of new improvements. And then it basically went nowhere. It's sort of like basically designed by committee, and no one wanted to actually improve anything. And then if you look at kind of what's happened now, it's much more community-driven. No one really has faith in Blockstream to actually make anything happen, which is good, because now there's this really kind of grassroots group of people building on top of Bitcoin, which is actually quite cool to see. On the Bitcoin layer 2 thing, we haven't made an investment there yet. I think it sort of reminds me of the ETH layer 2 space and the ETH scalability space. I probably looked at 60 or 70 companies before investing in Arbitrum, and I think the winning Bitcoin layer 2 maybe hasn't even been founded yet. The reason behind that is I think a lot of the people doing this right now, they're kind of following the hype, and they don't really have like a 100x better technical solution to it. There's still kind of a lot of issues behind making it actually work at scale and not just be kind of a clunky, super slow thing. But I think it's possible, which is pretty cool to see, and I'm excited to see what happens there. I think there'll probably be some research breakthroughs over the next year or two that could actually lead to something meaningful.
I think the big lesson that I'm pulling away from this resurgence in Bitcoin building is like people are building EVM layer 2s on Bitcoin in kind of like this compromise fashion. Even the BitVM is a one-of-n trust model, which is strictly inferior than it would be on Ethereum. But yet, nonetheless, people are doing it and people are investing in it. I think there's a number of notable things to pay attention to. Is that like with Bitcoin expressivity comes VC investment, comes hype, and it comes just with alignment of like capitalist interests, which is always going to be healthy for an ecosystem. So like you're going to see a natural draw that way. But even when we do have like strictly inferior layer 2 integrations with Bitcoin, nonetheless there's demand. Nonetheless there are builders. And like why is that? Like why are we so interested in building on Bitcoin even though when an actual like virtual machine on Ethereum can produce stronger security assumptions? To me it goes back to just the value of BTC as money. If you are some like early CryptoPunk NFT equivalent on Bitcoin, like you are the CryptoPunks of Bitcoin, you're going to get liquidity just because exactly what Nikil is saying, the liquidity of BTC, the asset is so strong that it just feeds right into its own local ecosystem.
And there's nothing to do with it right now.
And yeah, right. There's just a latent demand. That's exactly right. And like the things that we saw get absolutely destroyed in 2022 was Celsius, Bitcoin productivity through Celsius, Bitcoin productivity through BlockFi. Right, and so like now, and back in those days, layer 2s from the Bitcoin perspective, which tend to be much more conservative, were still very nascent technology. But in the year of 2024, layer 2s, which they are almost truly copy and pasting onto Bitcoin from Ethereum, are actually pretty robust technologies and are ready for prime time. And so the era of Bitcoin productivity, I think, is upon us in a way that we've never actually been able to see it before.
I like that, yeah. I think of blockchain as a combination of like network effects and technology merging, and in Bitcoin you just have huge network effects from the as you mentioned, liquidity there. Next, all right, so we've got some individual questions. Nikil, you have insight into everything people are building.
God mode.
Insight means alpha, right?
You should love it. Fun, man. What are the biggest challenges that you think devs are facing today and that you kind of see in the ecosystem?
Okay, I think there's 3 categories of challenges. One is core infrastructure and tooling. I like to think that we've had a small part in making that easier to build. There's this kind of cycle where developers build apps, and those apps are useful, so users come, so more developers come, and so on and so forth. Kind of that bottom part of the cycle of actually building things. I would say on a scale of if you think about building a physical building and you have where the cavemen with sticks and pointed sticks and mud to automated robots that build skyscrapers, we're probably in the the phase where you take the fire stick and you rub it like this, and then you make fire. So it's more advanced than just like a little stick, but we're still in like stick era. So we still have a very long way to go, and I think that's what we at Alchemy that's a huge focus of ours. I would say the second big piece of developer for developers is user interfaces and making that really easy to use. And that's something we've also put a lot of effort into. We just announced our kind of embedded wallet solution yesterday, and the idea there is make seamless UXs, because right now there's no way your guys' parents, or maybe some of your parents, but your parents are going to remember like seed phrases and gnosis, safe multi-sigs and like all this kind of stuff. So need to make that really easy to do. And then I think the third thing is user acquisition, and that ultimately comes from making apps easy to build, having good UX, and I think the thing that people don't realize, I think this is Joey's point earlier, is you have to have, my kind of way of explaining this is, if you ever have to say the word blockchain or decentralization when explaining your product, it is not valuable, because it needs to be so valuable that the benefit stands for itself, not based on the technology, right? You don't go to the restaurant and say, oh, well, I have this like computing device and I use the internet to pay for it. It's like, no, I just use like Uber and Apple Pay, right? And I think that we are still in that age of like, once we find truly, I think this is the trifecta of easy to build, easy to use, and actual real utility, that third piece of acquiring users will come.
Awesome.
I think you said that was my question.
Yeah, that was your question. Right. Joey, what are the biggest challenges that you see your founders have facing?
What was the question?
The biggest challenges you see your founders facing.
Oh, I think every company's different, so there's not like a concise answer to that one. But I would say in general, one of the hardest things with building a company is hiring. It's hard to find the right people. It's hard to not hire too fast, but also not hire too slow. I think another challenge that every company faces with is, how do you actually get the message of what you're building out there in a concise way that people understand, and that's very, like Nikil did a very good job of this with Alchemy. And I think it's actually really hard to do in crypto. Because in the reason why being so good at describing what you do is important is it matters to everyone. It matters to potential hires, it matters to potential business development partners, it matters to users, it matters to traders who are going to buy your token if it's a token project. And so that piece is really important, like brand and marketing. And then let's see what else. Yeah, I think those are kind of the main things. Like people face challenges of hiring, and then they face kind of branding challenges. Outside of that, everything else is kind of random and varies a lot across company.
Yeah, I think we see that a lot as well. It's especially now competing with AI and trying to getting good developers excited about the space. I think hopefully this cycle brings more excitement, especially if we combine the two buzzwords together. And then I think earlier we were saying blockchain is technology meets network effects and go to market. But we see the same thing. It's a lot of the folks that are coming out of our ecosystem, super sharp, great at tech. There's a learning curve in figuring out how do you actually bootstrap network effects and go to market. And I'm going to go back to that in a little bit.
Another problem is kind of lack of sleep lines under your eyes. See mine, Joey doesn't have any, so if you're a founder, get ready to sign up for that.
Yes, amen. And David, last but not least, curious, as you speak to thought leaders on a daily, weekly basis, what do you see as some of the biggest challenges and risks in the space?
Well, the challenges and risks are probably always because we have, in speculation is just inherent in this industry. And so building as a founder, especially as a first-time founder, when you are just cutting your teeth, chewing glass, trying to make it, both trying to make it inside of the short-term cycle while also trying to make it inside of the long-term cycle is a very delicate thing to balance, especially when just as a first-time founder, you don't know what it means to just think in the long-term time horizons, especially if you're inside of a single cycle and you need to pivot very, very fast. Product market fit is yet to be discovered in crypto, which means that that we have even less information about how to build a successful company. We have plenty of information to how to build successful infrastructure. And even that is even the successful infrastructure that has been deemed success because of high market cap is not necessarily the actual successful infrastructure that's going to stand the test of time over 10 to 20 years. Signal is hard. I would say to come to an actual final conclusion for your answer, finding signal in the crypto space is some of the hardest things to do, because it's a moving target, and also when people come in and they come into the industry and trying to learn it is typically also when noise is the highest and signal is the lowest. This is why I think anyone who has been in crypto, who's been a builder in crypto, always appreciates bear markets. I remember about one cycle ago now, right before new people came in, I was having the time of my life thinking oh my God, this is going to be great. This is going to be awesome. We're on the bull market. This is going to be fantastic. Me and all my friends are going to we're going to make it this cycle. And then I didn't realize how bad my mental health was about to be for the next 2 years. And I think that kind of can whiplash a lot of people, including myself. And then all of a sudden, anyone who's been in crypto for more than one cycle is I prefer the bear markets.
Agreed.
Yeah. And so going through that, it's kind of like a character development story, except you start as a baby. Every new entrance comes into the crypto world, just like learning the rules brand new again. We have a different way of talking. We have a different way of socializing. It's like a different culture. Navigating all of that is very, very hard. And like I said, it's a moving target, so it kind of changes every 4 years anyways.
Yeah, I think that moving target part, like you hit the nail on the head there. Like you're building for other crypto founders very often, especially in the infrastructure space, and like they don't know what they're building yet, and like that's a moving target. It's also interesting, like a year ago, a lot of the things that we're seeing today weren't even feasible to be built. So I think the only non-moving target is this kind of like RWA DePIN space, but we probably weren't ready to build for that space up until now. And I guess that takes me to the next question then, which is, you know, we're entering a bull cycle. I think.
We are.
We are. What infrastructure narratives do you think have brought us here, whether they're from a tech advancement perspective or not? I mean, there's obviously like Bitcoin, the halving, ETFs, et cetera. And then specifically on the infra, do you feel like there are any gaps that are still out there for us to be a more mature, like outside of tooling, more mature sector?
Yeah, I can go. Something that's kind of weird this cycle. Last cycle we had DeFi summer, kind of defined 2020, and that was like a bull market we made that ourselves. Like that was an internal endogenous bull market where we created wealth because Compound was valuable, Uniswap was valuable, Aave was valuable, Maker was valuable. We were connecting some of these things together. We invented governance tokens, and that was kind of the liquidity event that started all the speculation. And that was us. Like that was not external capital. That was not external retail individuals coming to play. And then the NFT mania took over, and that was like the new thing, right? So that was like the unpredictable thing. Like when I was thinking about like what was going to go mainstream in 2019, 2020, it's like, oh yeah, it's DeFi. It's strictly a better financial system. Turns out like consumers speculating on JPEGs was actually the reason why crypto was going to go mainstream, and that was not predicted. We have a lot of just very real innovations moving forward one cycle this time, but I don't think we've had some of that same like DeFi summer endogenous bull market that we had this last time that we have this time. Like Solana's kind of had like a microcosm of that, but it hasn't permeated throughout the entire crypto bull market. I guess the thing that we've strictly earned is like the ETFs. That is like something that the industry has earned, and now we are reaping the rewards of that. But that's like the fundamentals. And so like the NFT equivalent for this cycle, like it's the unpredictable thing, right? It's like we don't know what's going to come externally and define it. Like maybe it's AI. And yeah, like that's the thing I'm still kind of like circling on, like kind of keeping an eye on, like that part of the cycle where things get like unpredictable and extremely frothy is still like to be determined.
Joey?
Yeah, I mean, I think from like a price action standpoint, I think sort of what in my read of what happened is, you know, September, October, there was kind of not as low as the FTX low, but there was sort of a local low. Bitcoin hit like, you know, just under 25K. And, you know, I think at that point, there weren't really that many marginal sellers. But at the same time, there weren't a ton of people who could deploy a ton of capital into like Bitcoin and ETH during that period. And then when the ETF narrative kind of started to pick up, I think what happened is, you know, since 2017, I remember people saying, you know, oh, the institutions are going to come and buy crypto. And now that nobody's really talking about it, I mean, they're saying the ETFs here, but I think they are actually buying it from an institutional standpoint. You know, I think hedge funds basically front ran the Bitcoin ETF trade. And then, you know, when the ETF launched, there's just been, you know, massive inflows. If you add up GBTC and the other ETFs, it's basically roughly half of gold, which is wild to think about and probably higher than almost any of us kind of thought would happen this quickly. And so I think that's what's driven it so far. And then I agree with David that the kind of next phase over the next year or so, which I think will be sort of more the mania phase, that'll probably be driven by some, you know, other narrative that's not the ETFs. I think AI is probably going to be the narrative just because you can't really buy AI stuff in public markets anywhere. You can't buy OpenAI. On, you know, U.S. equities, stock exchanges, you could buy NVIDIA, but it's already way up. All the other public AI stocks are mostly not good. You can buy some stuff that's sort of a proxy play, like you know, Palantir's out there, but for the most part, there's not a lot of public market AI plays. And so if you're a retail person who is afraid of like, what happens if AI comes and basically just generates a bunch of wealth and I don't get any of it, what's the way I hedge against that? Well, I'll buy like whatever the crypto AI thing is that I can buy that's much quote unquote cheaper than Bitcoin and ETH, and that will kind of drive this huge, in my view, speculative fervor that we haven't really seen yet, but I do think is coming over the next year.
Call it AI shitcoins.
I was about to say, the only cheap way to slick it into AI, blockchain.
One thing that I thought was really interesting recently, and this is recorded, so I can't say everything, but I can say partially, had one of the commissioners of the CFTC over for dinner at my place 2 weeks ago. And it was really, so at Alchemy, we're kind of an infrastructure company, so we've generally been not involved in regulation. We don't handle money directly, it's changing now with wallet infrastructure. But one of the things that we were talking about was America versus the rest of the world in terms of crypto adoption, and also like the relative global strength of the US as a technology powerhouse, which, the computer, the internet industries really drove a lot of America's wealth creation and dominance as a superpower over the last 20, 30 years. And you look at crypto being kind of built around the world because the US has not gotten their act together in terms of regulatory clarity. One of the really interesting things I think will fuel this bull market to go even longer, hopefully longer, is we will see two things that will hugely influence US regulatory climate. The first one is the election at the end of the year. And basically, what we heard from the CFTC chairperson was that almost certainly Gensler's going to be out. Definitely if Trump wins, probably if Biden wins, almost certainly if Biden wins. And there's a lot of like nuance, and I'm happy to explain afterwards why, but that is a really interesting thing. The second thing, kind of nuance in that, is he actually doesn't really care about crypto one way or the other. This person had worked directly with him for a long time. His whole goal around this is he wants to be Treasury Secretary. The people who help kind of moderate these nominations are people like Elizabeth Warren and other people who have their own agenda of why they don't like crypto. So it's like really him just kind of executing these people's orders. And I think that will be a huge unlock against kind of this barrier that is holding back the crypto industry in the United States today. The second part of it is, I think the ETFs will have a much stronger influence on regulatory climate than we realize, because it's one thing for this like an average American to hear, this SBF guy with crazy hair scammed people and went to jail. Like, do we want that in our country? Versus their friends made money buying Bitcoin through their, Charles Schwab, and now I can't do it because my freaking senator said thinks this is dumb. Like, when it becomes a personal problem for average people, I grew up in Texas. When it gets a personal problem for people in Lubbock, Texas, that will influence regulation, because the only thing that the government people care about is getting reelected, right? So I think that those two factors will have a radical shift, hopefully in the Bitcoin, the crypto macro market, but as someone who lives in the United States and has benefited so much from this country, hopefully also will help us make us more competitive as a country globally in crypto.
I like it, yeah.
Wait, can I keep going on that? Nikhil, I want to unpack this a little bit, because this actually doesn't square the whole idea of Gary Gensler moving on. So I want to find truth here, because I got coffee with Hester Peirce this morning. She was here at ETH Denver. Hester's term ends 2025. Gary Gensler's term ends 2026. Hester wants out, because imagine working in that environment. Gary Gensler wants to be Treasury Secretary, as you said, but a lot of other people also want to be Treasury Secretary as well. And so her analysis is that if Gary Gensler doesn't get the job, which is less likely because of how many eyeballs are on that job, then Gary Gensler stays as SEC Commissioner, because he just wants to be in a position of power. He's one of these statists who enjoys that. And so unless Trump gets elected and kicks him out, any Democrat that comes in is probably just going to let it be. That's my analysis of the current situation.
So there's a bit more nuance. Is this televised?
No.
Suddenly I'm going to be audited tomorrow on my taxes.
No.
The short... All right. This is also when we do these private dinners, I try not to talk about this stuff publicly. The short answer is, if it's Trump, he's going to come clean house. If it's Biden, there's three outcomes which can happen. One, or actually there's really two outcomes, but there's one influence on it. One is that generally people like to come in, like during these transitions, they like to come in, they have all these political favors that they need because people have helped them get elected. They want to kind of swap stuff around because it's like, it lets them kind of do favors for people. And it's a little bit more nuanced to that, but let me just stop there. And then the second option is if he gets another job that is better than
one more rung up the ladder.
Yes, or something that's parallel, or he goes back in academia or something like that. That's also a very acceptable thing. The only scenario, and then the real reason behind this is he is, she said, this person said he is very, very smart, and actually very smart, which is interesting because, we think of him as dumb, but he's actually very smart, and he used to be at the CFTC, and he ran the same playbook of grabbing power, grabbed crazy power. This, I'm saying way too much on camera. This commissioner basically said, the CFTC and the SEC is kind of pretty unconstitutional actually, right? So when they come after you, the SEC serves you and says, we're gonna sue you. Then they are also the judge and they are also the jury. So in a case when they go after, I think Richard's I can say this. So at QuantStamp, they got sued by the SEC, and they basically came after them. And he said it was ridiculous. He said they came after him, and they're like, okay, this is a security. You guys are scamming investors. You need to pay $30 million. And then they were like, no, that you come sue us. And they were like, okay. They came back 6 months later, okay, pay us $10 million. And they were like, no, we're not doing it. We're not doing anything wrong. All our stuff we've done right. We're a utility token, all this stuff. And then they came back and said, okay, pay $6 million. 6 months later, okay. And then they were like, no. And then they just kind of negotiated it down. And the point here is that, and this is actually exactly what the commissioner said. The SEC is not really trying to protect consumers. It's not trying to do what is good for the country. This is all politics, and it's effectively shaking down these kind of companies to be a kind of example to other companies in the space to push this political agenda. So the last part that's really important on this is TLDR, she said he has pissed off way too many people on both sides of the house, and that's actually the big problem. So if Democrats come in, he's still probably out because he's pissed off too many people.
Nice.
In the power grab.
Can we crowdfund a token that'll get him a good job that's not SEC commissioner that doesn't touch crypto? Gary token. This was awesome. We've gone a little bit over.
If I disappear tomorrow, come find me.
Thanks, Nikil.
Guys, this is awesome. Thank you so much. Really appreciate it. Exciting times ahead. And guys, thank you all for coming. This has been an amazing day. Please stay. We have dinner, we have drinks, we have music, but more importantly, we have everyone here has been absolutely awesome. So thanks again, and have a good evening.
Thanks for having us.